have started from understanding why should one invest because of the inflation, to create wealth and to meet the goals. And then the second question will be then where to invest. Okay, so there can be various different asset classes based on the individual's risk and return characteristics. He will decide where to invest. So there are multiple asset classes like fixed income, equity, real estate, commodities. So that way the individuals can invest. So each and every products will have a different risk return profile. So if we say fixed deposits will have a very limited risk as compared to the private equity or as compared to the stocks. So each and every individual will have its own risk and return appetite, and based on that they will invest. Then how the Indian capital market is structured. So there are two different markets, primary market and secondary markets, and there are very intermediaries and players who runs this particular market. So what is the difference between primary and capital market? Primary and secondary market is what we have learned yesterday. So primary market is basically to raise the capital, whereas secondary market is for the investors to trade in the market and to earn certain profits in the market. Then when we say primary market, it means initial public offering. So why the company goes and do the raising of the funds. So there are multiple reasons for that. And then the process of IPO and the recent IPOs that happens in India. Then we have seen the secondary market. So what is secondary market? Secondary market is nothing but a stock market. It's an electronic process where buyers and sellers comes and buy and sell a particular securities. The entire process from primary market to secondary market, and then from the trading as an investor, how we can trade. Then we have seen what are the different jargons that have been used in the stock market, and then we have seen the transaction cycle which are there in the which has to go to the entire process from decision to trade, placing order, from trade execution, then clearing of trades, settling of trades, and then the movement of the funds and securities. So this all takes T+2 day for the entire settlement to happen. Then we have seen how to buy and sell a stock. So we have seen the broker terminal, where you have to make certain decisions like which exchange you have to buy into it, which stock you require to buy, what trade you require to put, like types of trade, like whether you to put cash or cash to carry or intraday trades, how much quantity you want to trade, depends on the margin that you have in your account, and also the price, at what price you are required to buy it. So you want to buy it at a limit price or at the current market price. So that decisions is required to be made by doing the trading on the markets. Then the entire process from execution to clearing to settlement, how the stocks moves from one to other. So the first is a validation check through the broker terminal, then it moves to the clearing, and then it moves to the settlement process. Then we've seen front office, middle office, and back office, what role each office is plays in the broker end and on the clearing end and on the settlement end. Then we've seen why we are required to invest in stocks. So broadly, yesterday what we have learned is about the equity market, how equity market functions, and what are the ways in which you can start trading in equity market in practical manner, and what is a back-end process that takes place once you have invested into the equity market. So generally we have seen largely on investment and equity. Today what we are going to see is what are the different corporate actions that are there in the stock market, which company announces once it gets listed. Now why it is important to know corporate actions, right? Why it's so important? Because when you start investing in equity market, all these corporate actions will have an impact on the stock prices. So whenever you will go and invest in a particular, whenever you buy a particular equity in the market of a particular company, those companies on a regular basis announces certain corporate actions. Now these corporate actions will have a certain impact on the stock prices, whatever you have bought. So that way, to understand this corporate action, it becomes important for us. So because we are an investor into the equity market. So we are going to study in detail what each and every corporate actions have an impact on the stock prices. So we have different 5 stock corporate actions, like one is dividend, the other one is a stock split, the third one is a bonus issue, buyback, and right issue. So these are the 5 main broader corporate actions. We'll learn each and every corporate actions in a detailed manner.